Okay, guys, welcome. It's Sunday, August 22nd. My name is Dave Coker, and this is Talking About Finance. And we're going to start out like we do every week now, looking at the S&P 500. I'm looking at it over the past 1 week. This is from the wonderful FinViz, so you can go generate these charts or these heat maps, as they're called, yourself if you're curious about this stuff. And we had some weakness last week, and it seems it hit the tech sector. We can also see it down in financials, lower left-hand corner. A lot of red on the screen, actually. Remember how to read this. The darker the red, the brighter the red, I should say, the worse the loss. And you can see we did have some sectors that were doing okay. Pharmaceuticals in the middle, healthcare, I should say, drug manufacturers and medical devices, things like that. That seemed to be fairly resilient. A lot of this seemed to get back to fears or concerns about the Fed tapering. Now, personally, I think the fears are a little overblown. Corporate earnings are sizzling. They're very, very strong. Already, we're well above 2019 levels. And they still seem to be advancing, so we'll have to see about this. I actually did pretty good last week, but as you guys know, I only own dividend-paying stocks, and well, I got bullion also, as I revealed. Dividend payers, guys, they last week in my portfolio they flatlined or went up, and this is. It depends upon which stock you're looking at, but this is consistent. Dividend-paying stocks are what we call low beta, if you're financially inclined. They just don't really have the extreme volatility that you see, say, with an Amazon or an Apple, these other companies, because you get the money constantly back, or not constantly, but back in discrete payments. So gold and silver got hit a little bit, but I established those positions in March 2019, so lots of upside since then. So if you're in the market, stay long. And dividend payers, as I said, take a look at them if you don't own any. You might want to consider putting some on, because we do know this market has been pretty exuberant, as we talked about last week. But we saw some sell-offs, and let's put it all into perspective. This is a good one. One of my friends, she's over in Germany. Well, German gal living in Germany, right? And this is really wild, because we got the market cap, I should say, for the DAX versus some of the giants, some of the tech giants in the States. And we saw some weakness last week. Now, a lot of that in the States was sector rotation. So we saw defenses and consumer staples performing well. But some of America's tech titans compared to the DAX, it's an interesting chart, little misleading. And here's why. When I was with DB, I lived in Frankfurt for a couple of years. And guys, we don't have to live there to know this, but it's something that I'm aware of. The foundation of German capitalism is something called the Mittelstand, the small and medium-sized, typically family-owned businesses. So the equity culture that we see embraced in the US, the UK, and China, for instance, just isn't a force in Germany. They tend to finance themselves with bank loans. And as I said, they're typically family-owned. So it just doesn't reflect really well. So this sort of works. And it's interesting because when you look at these stocks and you look at the market cap and you look at the earnings, it's interesting because we talk a great deal about US earnings, but here we're looking at global earnings. And my gosh, look at the slope of that line. Post-pandemic, it just rocketed right up, right? And again, this is a plus for stocks overall. So it really makes you wonder about the markets and how much this is going to continue and how much further they're going to go up before they inevitably drop back down. But on an earnings basis, guys, like I mentioned in the States, as well, globally it appears, earnings are very, very solid. So when they're making money, you got to wonder who's buying stuff, who's doing the consuming. And this is an interesting one, straight off Bloomberg. I consider this bullish. I'll tell you why in a second. We've seen how stocks have performed and earnings are booming, but Americans are exiting their second pandemic summer, and they're not really sure about the economy. So it's really interesting when folks are concerned about the economy, they simply don't spend much money as they would otherwise. And some 70% of US GDP is based upon consumption. So it's reasonable to ask, guys, who's spending all the money that's driving earnings? Now, one of my friends, she disagrees. She says this is bearish, and she's got a point. Things could easily go south from here. We're hearing about new variants all the time. Now they've got the Lambda, which is from South and Central America, from Peru, I believe. They've got the Lambda variant. I don't know. We'll just have to see how all this goes. But in any case, guys, keep in mind dividend-paying stocks. They're your friends. Once a month, they're your good friends, or once a quarter. It depends. I've got mostly monthly payers. I've only got one in the taxable account, one quarterly payer. And yeah, it's interesting. So I'm not really sure who's doing the buy-in, but dividend paying stocks are your friends. And I like to keep an eye on the Wall Street bet crowd. Now, Robinhood publishes lots of data and it describes what their customers are up to. And look at this. My gosh, this is wild. Looks like the Wall Street bet guys, the Robinhood crowd, they're moving from options into crypto. They're gambling with options. They used to. And now they're gambling with crypto. And I don't mean to be disrespectful. I wish those guys well, but trading just isn't a way to build wealth. You've got significant risk. You've got friction from taxes, short-term holdings, short-term capital gains, and other issues. And guys, I've mentioned this before. I did get a couple questions about it. We've got the tax data from America's Inland Revenue Service, our Internal Revenue Service. It's the equivalent of the UK's Inland Revenue. We've got tax data. And this has been around for years. We know that 95% of the people who describe themselves as a trader, they don't even break even, guys. And of the remaining 5%, most make relatively small sums. In other words, they can't support themselves. They can't live off their trading. So it doesn't matter if they're doing day trading, swing trading, whatever. If somebody tells me, and it's very often I hear from traders, right? I don't believe them. I don't say anything. I'm polite, but somebody describing themselves as a trader, unless they tell me their their entry point when they took it on, and then they tell me when they exited, I just don't believe. Because usually what happens is these people constantly talk about taking profits. Yeah, took profits last week, took profits. They don't talk to you about the losses, right? So again, if you want to achieve financial independence, dividend-paying stocks are the way. My portfolio generates far more monthly cash flow than we need to live on. In fact, it generates more than my day job. So hopefully these guys will get religion and try to stop trading, because there's just really no way that you can actually do this. Oh, and here's a good one, right? I'm actually cheating, guys. Sorry about this. I'm putting two graphics on one slide, but it's pretty interesting, right? I've got a lot to share with you, my God. We've all heard about the problems the auto industry is having with getting chips, and that was used to explain away the surge in used car prices. It's curious that other industries aren't impacted, because chips, if you look at it, chips are used everywhere, these guys. I haven't really seen it impacting other industries. Here's an example. Now, I'm interested in Bitcoin mining. I used to do it years ago, and I've kept my finger on the pulse, so to speak. And I'm doing a deal right now to acquire some mining hardware. Now, 2 years ago, almost 3 years ago, when I looked at the space and I talked to some manufacturers, the manufacturers were quoting 2-month lead time. Well, last week, when I did an order, I was quoted 2-month lead time. So I'm not quite sure why the auto industry is having so many problems. Still, if you want to make money, chip manufacturers are really sort of pricey. It seems it's a trendy trade. Everyone's going into the chip manufacturers. Here's what I would recommend you want to do if you want to make money off of this. I think you should probably look at tin. Because I know, having looked last week on Bloomberg, you can still get tin miners for maybe 2 times free cash flow, 2.5 times free cash flow. It just isn't going to happen if you go into a manufacturer of chips. It's really interesting. So go for tin, because when they make the chip, when they make the device that uses the chip, they use tin for soldering. And no, it's not sexy. Yes, it's very old. Yes, it's largely overlooked by most people who look at the chips, or even the end users of chips, the manufacturers that put them in products and things like that. So it's all about making money, guys, isn't it? No matter what we're doing. Here's an interesting graphic. Now, I mentioned before, I've got a fairly large property business, and I've been building it up, I should say, for well over 20 years. Most of my assets are up north, although I do own in London, but I bought those properties well over 20 years ago. I wouldn't be buying them in London now. It's very interesting. Now, this is curious, because what I'm sensing here is that people are finally realizing life in London isn't all it's cracked up to be. First of all, you've got really high property costs. You've got pollution, and they're discovering all sorts of oddball diseases that people get, health conditions that people get linked to particulate pollution. Oh, and the noise, my God. I'm on conference calls all the time with folks living in London. It's a noisy town. And where we are in Essex, I can go out and lay down that road. That's going to happen to me, right? It's just so noisy. So if you look at these rental prices, it seems we're seeing drops. I'm not sure how persistent this will be. It hasn't impacted me. In July, I changed tenants in one of my London flats. Had to go up there. It was the first time I was in London in quite a while. Had to actually go up there and sign the lease and do the check-in inventory face to face with the tenants. It hasn't impacted me. I'm not quite sure. My business operates in the luxury city center segment. So regardless, that's the segment that I've targeted my business on, whether it's up north or down in London. I'm wondering if these are at the lower end of rentals and they're just having difficulty getting people to move into these properties. And I'm not quite sure. I'm going to follow this a little bit further. So yeah, it's a really interesting, but property is an excellent way, guys, to build wealth. And I'm always amused when somebody tries to explain to me that you can't get rich in property. Okay, all right, tell me another one, right? No, I disagree with that totally. But here's some interesting stuff from Deutsch. One of my friends over in Deutsch sent me some research, and we were talking about this on the Telegram channel. Yeah, people in the States, they've got lots of disadvantages when they try to buy property. I'm not really surprised by this. College debt. You have to incur, if you don't have the capital, you have to incur a life-changing amount of debt to graduate from university there. College debt, sky-high cost of healthcare, just in general. It takes longer for people to save up a deposit these days. Now, as I said, I do find it sad, but I'm hardly surprised. Maybe now that the U.S. is no longer in Afghanistan, the government can spend money on its citizens. I think we all know that ain't going to happen. They're going to find another war to get involved in. But regardless, the people just ain't got the money anyhow. And this is straight from this week's FT, but we bounced it around on our list there, right? And when we're looking at median wages, if we look at the 2/3 of the median wage, that generally is defined as the poverty line in most countries. And you can see America's number one here. We got the most workers right down there, really low into the poverty line. It's wild. So I don't know. It seems like it's the worst country to be earning a low wage in. As I always tell people, if you want to get filthy rich or just rich in general, go to America. The system is geared towards the accumulation of wealth. And you can get rich in the States. You can. I think what you want to do is leave like I did. Go live in an area where overall it's cheaper to live. And I know a lot of people tend to do just that. So, wonderful country, great place to visit. I'm always ashamed when I talk to some foreigner and they've seen more of the United States than I have. I haven't really seen a great deal of it. I haven't even been back there since 2008. But regardless, if you want to get rich, go to the States. Get rich. Just make sure you don't have any problems where you fall onto the public purse, so to speak, because there ain't no support. In other words, in America, if you want to eat, you got to work. It's just the way the system's set up, although the taxes are low. So we'll have to see how this all pans out. All right, guys, I hope you have a safe and profitable week. I'm not really sure about futures. I haven't looked at them recently. Oh, we didn't talk about Bitcoin. Alexa, what's the price of Bitcoin?
One Bitcoin is worth $48,230 US, down 1.7% over the last 24 hours.
Oh, the whore, the pain. Anyways, I bought Friday, like I do every Friday, and I'll continue to do so. Whatever you're investing in, I wish you well. Check back next week. Take care.